Good morning, everyone. Magandang umaga sa ating mga kababayan, saan mang bahagi kayo ng Pilipinas. I'm Junjay Perez mula sa MiMAP o Rimansi, and I will be your facilitator for the morning sessions in the next 2 days. Happy Microinsurance Month sa ating lahat. Alam niyo ba na this is the 14th year na that we celebrate Microinsurance Month since the presidential proclamation in 2007. And of course, we acknowledge the presence of the different microinsurance stakeholders na kasama natin ngayon. Of course, yung ating mga microinsurance MDAs, mga microfinance players, ang ating mga government partners, insurance companies, mga technical service provider partners, international development organizations, our friends from the Asia and Oceania Association of the Global and Co-op Mutual Insurers. Nandito din po sila, and other guests. Thank you for making time to join us in the next 2 days. So we say, welcome to the second online version of the National Microinsurance Forum. We had the same online version forum last year. And actually, we did already a publication nung forum natin last year, and it can be accessed available sa ating website, rimansi.org. And of course, this event is being organized by the Microinsurance MDA Association of the Philippines, also known as Rimansi. Wow, we have a big crowd here, a good crowd. About 500 na kasama natin ngayon sa Zoom at saka sa Facebook Live. We'd like to acknowledge as well and thank our sponsors for generously supporting the event so that we may be able to hold this forum for free. Maraming salamat, CISP, BPI AMTC, Card MBA, CPMI, Globe Business, maraming salamat, NATRE, PhilCare, RMSI, and of course, ang ating mga microinsurance MBAs. And we recognize also the unwavering support of the Insurance Commission to the microinsurance sector. Para lang sa mga technical reminders para sa ating session, yung atin po, the participants' mic will be put on mute. If you wish to speak, you can raise hand or use yung ating Zoom chat box. Please use also the reaction button to respond to our resource persons and facilitators. Let's maintain also yung camera natin na naka-on, so as much as possible for better interaction. This session is recorded for future reference and playback. We encourage also everyone to ask questions. Again, pwede natin gamitin yung ating virtual na raise hand function and or magpadala ng questions natin via chat. Para po dun sa ating mga active sa social media, we can use the hashtag NMI Forum 2022. You may also want to like our Facebook page and subscribe to our YouTube channel where we'll be uploading the recording of our sessions. But before we dive into the discussions, we invite everyone for the invocation led by Ms. Elena Velasco, the board treasurer of MiMAP, and immediately will be followed by the Philippine National Anthem. Ma'am Lena?
Yes po. Morning. Good morning po. Hello, sir.
Go ahead, Ma'am Lena.
Okay po, tayo pong lahat ay manalangin. Heavenly Father, we come to you today asking for your guidance, wisdom, and support as we begin to this virtual National Microinsurance Forum 2022. We thank you, Lord, for your goodness and for your blessings over us. Guide us, O God, for this meaningful discussion, and may you continue to give us strength and open mind as we work in our respective organization as well as in Rimansi. We pray, Father God, for this 2 days activity and have a meaningful discussion that will help us in everyday lives. We also pray for all the speakers, all the participants, and all the committees in this forum. Help us to deal with different challenges that we are facing right now, especially in this time of pandemic. Lord, we lift up to you our lives and protect us from any harm. All we ask in Jesus' name we pray. Amen.
Bayang magiliw, pwes na silanganan, alam ng puso, sa libig mo'y buhay. Lupang linirang, tuwing ka ng magiting, sa manlulupig, di ka pasisiin. Sa dagat at bundok, sa simoy at sa langit bumagaw, may dilatang tula at awit sa panglayang minamahal. Ang islap ng mataw at may tagumpay na nagniningning, ang bituin at araw niya kailan pa may di magdidilim. Lupa ng araw ng walhati pagsinta, buhay langit sa piling mo. Ang ligaya na pag may mga api, ang mamatay ng dahil sa'yo.
Now, we may have different things in mind for attending this forum. And so I give you the president of the Board of Trustees of MiMAP and the General Manager of ASCII MDA to tell us what to expect in this forum and formally welcome everyone in this event. Ladies and gentlemen, Ms. Emmy Quijano.
Yusek Hill Beltran, Chief Economist at Department of Finance, Attorney Dennis Funa, Insurance Commissioner, Mr. Aftab Ahmed, Chief Executive Officer, Citibank in the Philippines, Dr. Jaime Aristotel Alip, our Chairman Emeritus in MiMAP Rimansi. Joining us tomorrow, our Presidential Advisor for Entrepreneurship, Joey Concepcion, and DOH Yusek Maria Rosario Vergere. Distinguished resource persons who committed to help in our discussion in this event, board, management, and staff of MIMBAs, MFIs, and co-ops from around the country, government and private partners, especially the Insurance Commission team, promoters, practitioners, providers, and stakeholders of microinsurance. Good morning and happy Microinsurance Month. We thank everyone for taking the time to join the second version of our virtual National Microinsurance Forum, Facing Uncertainty Through Strategic Innovations. 2 years into the pandemic, COVID-19 cases worldwide soared to about 350 million, affecting 222 countries and territories with over 68 million active cases and more than 5 million deaths. About the same period last year, we only had then 98 million cases with over 2 million deaths. From number 32 in world ranking last year, the Philippines is now in top 20, with USA is still number 1 spot with more than 71 million cases, now from just about 25 million cases last year. Locally, more than 500,000 total cases in the same period last year. We have now more than 3 million total COVID-19 cases, with about 280,000 active cases. Deaths have already breached 53,000 from about 10,000 in January 2021. By mid-January 2022, 54 million Filipinos are now fully vaccinated. Even as the world has been focused on COVID-19, natural calamities continue to pose a major hurdle in our poverty reduction effort, with greater unpredictability and severity. Last December 2021, Typhoon Rai, with local name Odette, was the 15th storm to hit the Philippines and was the strongest storm of the year that affected more than 8 million persons in 11 regions of the country. We can't overlook as well severe tropical storm Kompasu or Marine that caused floods in northern Luzon last October 2020. Despite the lingering concerns of the pandemic and climate risk, the 2022 Global Insurance Industry Outlook Survey conducted by the Law Center of Philippine Financial Services, however, expect an accelerating economic recovery and additional digital technology investment to generate significant growth. While the industry appears poised for significant growth and a much stronger financial performance in 2022, the research also identified multiple challenges for insurance leaders to tackle this year beyond ongoing efforts to adapt to the pandemic's aftermath. They range from economic hurdles such as the potential for sustained inflation to sustainability concerns including climate risk, diversity, and financial inclusion, to rapidly evolving consumers' product and purchase preferences. In a Business Mirror article earlier this month, Insurance Commissioner Dennis Funa described 2021 as a year of growth despite the adverse economic effects of the pandemic in 2020. With growth in the industry's premium income, investment, and assets as of the third quarter, emphasizing the value of digitalization as well of the industry long before the pandemic ensued. He expressed optimism that the insurance industry will remain on its growth path in 2022 as the country's economy is expected to grow. For the microinsurance MBA sector, we have seen a slight decline in membership and contribution in 2020, but rebounded in 2021, posting more than 12% growth in membership and 41% growth in contributions based on their interim report. Total number of Filipinos insured by MBA is now more than 27 million, paying a record of 2.55 billion in claims benefit, of which about 13% are COVID death-related claims. Overall, the MIMBAs paid an average of 284 claims and 7 million in benefits every single day in 2021. Now, what to expect in this two-day forum? COVID-19 reawakened the VUCA model coined by the U.S. Army in the 90s Gulf War. Volatility, uncertainty, complexity, and ambiguity. All four characteristics of VUCA are true of the challenges we face from COVID-19 as described by Edward Gabor, a training development practitioner. Volatility, changes due to COVID-19 are taking place every day, unpredictable, dramatic, and fast. Uncertainty, no one can predict with confidence when the pandemic will end. And complexity, the pandemic is affecting all aspects of life, including healthcare, business, the economy, and social life in complex ways. And last, the ambiguity, there is no best practice that organizations can follow to manage the challenges caused by the pandemic. And so, looking at these challenges, we will have 4 panel sessions in the next 2 days that will take up strategic innovations and initiatives in different areas. Session 1 this morning will discuss the scope and scale of climate or disaster risk financing needed to proactively manage the challenge of climate change and its impact on individuals and communities. Session 2 this afternoon will explore product and distribution adaptation strategies that the key insurance and microinsurance players have put in place to continue to be relevant to changing needs of clients and continue to provide outstanding customer experience. Session 3 tomorrow morning will talk about solutions and initiatives that are needed for business continuity and greater resiliency of MSMEs, especially micro-entrepreneurs and the roles of microinsurance and microfinance against pandemic and climate risk. And session 4 tomorrow afternoon will take up the future of work in the post-pandemic world and the strategies being implemented to improve the employment environment towards attracting and retaining talent. Again, we would like to thank our sponsors, 1CISP, BPI AMTC, Hard MBA, CPMI, Globe Business, NATRE, FieldCare, RMSI, and of course, our MIMBAs. Special thanks to the Insurance Commission for a very solid support to the microinsurance sector. Finally, on behalf of the MiMAP Ripansi Board and Program Partners, we thank you all and we formally welcome you to the second virtual version of the National Microinsurance Forum. Thank you.
Thank you very much, Ms. Ems, for setting the tone and getting us excited for the forum discussions. Okay, January is indeed a great time to reflect on the gains and challenges of the past year and a fresh start for doing more this year. And the Association of MIMBAs has been kindly supported by Citi Foundation in its capacity building programs. To give us his take on the Citibank's business initiatives in terms of helping stakeholders cope and deal with pandemic, as well as his insights on innovative strategies for ensuring business sustainability. Friends and guests, please join me in welcoming the Chief Executive Officer of Citibank Philippines, Mr. Aftab Ahmed. Can we have, can we spotlight Mr. Aftab, please? Thank you. Okay, I understand Mr. Aftab is already around, no, from the breakout room. So can we try again, team? For can we put Mr. Aftab on spotlight, please? Okay, thank you, Mr. Aftab is already here in our main room. So again, let's welcome Mr. Aftab Ahmed. Good morning, sir.
Funa, Rimansi Chairman Dr. Aris Alip, and President Emiteria Quijano. Ladies and gentlemen, a warm welcome. On behalf of Citi Philippines and Citi Foundation, I'm honored to be joining you today at this year's National Microinsurance Forum organized by Remansi. While I had hoped that we would meet in person this year, I'm delighted that we're still able to come together virtually. 2021 was yet another unprecedented year. The global pandemic continues to impact many aspects of our lives, with new variants emerging that pose additional challenges. The past 2 years have not been easy. We've had little control over the unfolding events that have impacted our businesses, but we remain extremely hopeful that we will overcome this collectively. As we continue to navigate the pandemic, it is very important for us to remain highly optimistic and have a "we will prevail" mindset. Additionally, we need to retain our focus to ensure that our respective businesses can successfully handle the challenges we are facing. Citi is strongly committed to helping micro-entrepreneurs, and in this regard, we interface extensively with Remansi, microinsurance, and microfinance institutions, as well as micro-entrepreneurs. Microfinance and microinsurance are one of the most promising and cost-effective ways to achieve financial inclusion. Micro-entrepreneurs, through their drive and determination, turn very small loans into viable businesses. Microfinance has also helped women entrepreneurs become economically independent and support their families. Microfinance and microinsurance are opportunities that have not been fully tapped, and it helps people help themselves, as well as create new markets. Microfinance is about giving hope. In the words of Natalie Portman, small loans can transform lives, especially the lives of women and children. The poor can become empowered instead of disenfranchised. Homes can be built, jobs can be created, businesses can be launched, and individuals can feel a sense of worth. Today, I would like to share with you lessons learned from several micro-entrepreneurs that we have interacted with. I hope you will find the insights relevant to your respective businesses and that you are able to use some of these strategies and approaches. The top 5 lessons shared by successful micro-entrepreneurs are as follows. 1, investing in innovation. As we have seen in the last 2 years, things can change very quickly and unexpectedly. This requires us to adapt and innovate swiftly, as well as be on the lookout for new opportunities. A micro-entrepreneur who runs computer shops transformed his business by expanding into computer repairs, selling computer parts, and editing videos for local businesses. 2, taking the business online. Many successful micro-entrepreneurs tap channels beyond their physical stores and leverage social media to market their products. By doing this, they were able to develop a network of online resellers who contributed to increasing their sales. 3, responding to the demands of logistics. This involves making the business adapt to challenges of the pandemic. When public transportation was suspended and patients were unable to visit the owner of a maternal and child care clinic, he provided patients with transportation to get to the clinic and to return home. Another story involves a seller of delicacies who suffered business losses because of travel restrictions. But since food is still a necessity, despite the lockdown, she decided to open a fish and vegetable stand outside her home. 4, changing the business model. In response to pandemic-related challenges, some business owners tweak their businesses to continue to make their products and services available, as well as develop new ones. A fried chicken business owner set up food carts to go around his community to make his products more accessible to customers. He began offering fresh marinated chicken and opened up to resellers. 5, being there for others, including employees and the community. A very common thread woven throughout the stories of these micro-entrepreneurs is that they persevered not only to keep their businesses afloat, but they wanted to help their employees and their communities as well. There is one who hired working students. Another found a way to provide her employees with some capital to start a small business. And most, if not all, of them provided free food or masks to frontliners working in their communities. What these micro-entrepreneurs did for their businesses, their people, and their communities bring to mind what we as Citi did in response to the pandemic-related challenges. In terms of investing in innovation and changing the business model, we continue to invest in improving our products and services to meet the needs of our clients. This involves understanding the challenges that they face and coming up with solutions that fit their needs, such as customizing digital payments and creating a fully digital credit card application process. Taking the business online, we maximize our digital capabilities and leverage several channels to deliver our products and services to our clients. This includes expanding our payment channels, marketing through different media, and working with many brand partners who have online presence. Responding to the demands of logistics, we enable remote working for 90% of our 8,500 employees who work from home. And similar to the story of the clinic owner, we provided transportation for our staff who needed to be on site. Being there for others, including employees and the community. Aside from ensuring a safe and healthy work environment, we recognize the toll that the pandemic has taken on everyone's well-being. Locally, we have initiatives such as webinars to address mental health and work-life balance. Additionally, we offered a free vaccination program for employees and their dependents and purchased oxygen concentrators for our employees and their families to use in case of an emergency. We also reached out to the community through COVID relief in partnership with a few NGOs. What we can take away from this is that there are tremendous commonalities in our experiences, which highlight that no matter how large or small your business is, the core principles in addressing a crisis remain more or less the same. Don't panic, stay calm, and stay focused on addressing the challenges. Look for the opportunities. Modify your business proposition as the need dictates. Persevere, be diligent, and be compassionate towards others. I hope you will find the lessons and insights shared to be useful, and that you share our optimism that things will normalize soon. Thank you, and a good morning to all. Thank you.
Thank you very much, Mr. Ahmed, for sharing the Citibank's different initiatives in helping its stakeholders cope with the impact of the pandemic. No? At this point of time, you request Mr. Ahmed, Dr. Ali, Ma'am Emmy, and Ms. Fe for a quick opportunity, no, before we proceed to the next part of our program. No? Can we have Mr. Ahmed, Dr. Ali, Ms. Emmy, and Ms. Fe in the spotlight, please? Thank you. Good morning, Dr. Ali. Good morning, Ms. Ems, and good morning, Ms. Fe. Okay, Aleli, are we ready?
Yes, sir. So I'll be taking the screenshot now. So please smile po. In 3, 2, 1. Okay, one more. 3, 2, 1. Thank you so much.
Thank you. Again, thank you very much, Mr. Ahmed, for always joining in our National Microinsurance Forum, and of course, the officers of the MiMAP board. Okay, so it's now time for a quick trivia, which will pop up on your screens now. We encourage everyone to participate, and we'll give you 30 seconds to send in your answers now. Can we, Judith, can we show now our poll question? Okay, so just to check if you're following us, Karina. What year was Presidential Proclamation number 1212 declaring January of each year as National Microinsurance Month issued? No? Anong taon dineklara yung January as National Microinsurance Month? Okay, let's start voting, no? Kailangan natin ng audience participation para hindi kayo para makagalaw-galaw tayong lahat. Okay? Votes are coming in. Okay. %30. Ganun ba? Okay. So, ang ating pong tamang sagot ay 2007. Tama po ba ang ating sinagot? Maganda, 60% ng ating mga kasama ngayon sa Zoom ay sumagot ng tama. Year 2007. Okay, maraming salamat po sa inyong active participation. Okay, moving forward, our keynote speaker for this morning is the lead champion for microinsurance at the Insurance Commission. He is a lawyer by profession and author of various law books, a law professor and practitioner, recognized as an authority in intellectual property and constitutional laws. He joined the Insurance Commission in 2013 as Deputy Commissioner for Legal Services and subsequently appointed as the Insurance Commissioner late in 2016. He will share about the developments in the insurance industry and the regulatory and policy environment. Friends and guests, I give you the Honorable Insurance Commissioner, Attorney Dennis Funa.
A pleasant day to all the guests, audience, fellow speakers, and the organizers of this year's National Microinsurance Forum. My gratitude and felicitations to the officers and members of MiMAP Limansi for the well-received invite. I would also like to acknowledge Ms. Emeteria F. Quijano, President of MiMAP Limansi, and of course, Mr. Jun J. Perez, Executive Director. I hope that you continue to lead your organization in promoting the further development and innovation of our country's microinsurance sector. Insurance has been proven to be an effective tool in mitigating an individual's costs and expenses stemming from unforeseen events and other incidents of unknown peril. To cater to the needs of the low-income and marginalized sectors, microinsurance and other microfinance instrumentalities were introduced, providing the protection and benefits similar to that of regular insurance, but at a lower cost of premium. This has been instrumental in securing the financial stability and promoting financial inclusion among our countrymen. Back in 2019, Undersecretary Gil Beltran of the Department of Finance had expressed the government's aim to cover at least 50 million individuals with microinsurance by the year 2022. At this moment, I am pleased to pronounce that this vision was fulfilled 2 years earlier, as the number of lives covered by microinsurance have surpassed the 50 million mark as of the year-end 2020. This achievement serves as a testament to our continued efforts in reaching out to our fellow Filipinos and the relentless commitment in building a financially inclusive society. Yet, we could not turn a blind eye on the adverse effects of the pandemic and the challenging economic conditions. For the past years, the insurance industry has been through many ups and downs, but one of the greatest challenges has been this COVID-19 pandemic. Considering the unprecedented times we are in, the Commission provided regulatory relief to allow respite from the impact of the pandemic. One of the challenges that we face in the onset of the pandemic is the resulting lockdown and travel restrictions. Insurance companies and other IC-regulated entities had to close their offices for quite some time. This affected their preparation of the documents and reports due for submission to the Insurance Commission. Needless to say, the business disruption also affected their day-to-day operations and transactions. In answer to this, the Commission had required the online submission of reportorial requirements from our regulated entities. We also adjusted the deadlines for the filing of necessary reports in order to give companies more time to process their documents. As we gradually learn to live with the so-called new normal, our regulated entities and the Commission had adopted work-from-home setup and other alternative work arrangements in order to keep the operations going while still adhering to the basic health and safety protocols. In March 2020, immediately after the crisis hit, we issued Circular Letter number 2020-21 to put on hold the issuance of cease and desist orders for companies who fell short of the 900 million minimum net worth requirement, which took effect on the end of December 2019. The Insurance Commission, however, still monitors the insurance company's financial condition on a quarterly basis and will not allow companies to declare dividends when they have not complied with the minimum requirement. Another challenge is the applicable taxes for non-life microinsurance products. In view of the limits that MBA products can be sold, they usually partner with a non-life microinsurance provider to design and sold products for the needs of their members, which can be insured only by non-life-based products. The tax rates applicable to a regular non-life insurance product is also strictly applied to non-life microinsurance product. If this matter cannot be addressed, it is possible that there will be few microinsurance providers in the non-life sector that will offer this product. The Insurance Commission also recognized the effect of the pandemic on the liquidity of consumers and companies. The Commission released Circular Letter 2020-18 to encourage insurance companies, HMOs, and pre-need companies to provide their policyholders additional grace period for the payment of premiums. In addition, Circular Letter 2020-58 provided regulatory relief on the admittance of premiums over 90 days due in the computation of their net worth. Aside from travel restrictions, social distancing measures also limit our mode of interaction with our customers and stakeholders. The traditional face-to-face selling of insurance products became impracticable. As a solution, the Commission had allowed the remote selling of insurance products through the use of video conferencing and other technologies that support remote communication. Recognizing the benefits derived from this, the Commission institutionalized the remote selling as a permanent mode of selling insurance products. Moreover, insurance companies utilized the online insurance market to distribute their products. Several insurance companies launched their products through their own e-commerce platforms. Some forged tie-ups and affiliations with online marketplaces such as Shopee and Lazada, and mobile wallet apps such as GCash. In terms of reaching the masses, the significant growth in the use of smartphones and other mobile devices provided an opportunity to deliver cost-effective financial literacy campaigns. Mobile phone-based insurance, or simply mobile insurance, has become an emerging distribution channel for microinsurance. Truly, we can say that technology has played a vital role in promoting financial inclusion among the people. But there is also a downside with the increased digitalization in the insurance industry. Going digital and the use of insurtech innovations in creating microinsurance products is a rosy opportunity to be explored. But it will be a challenge, especially in the far-flung communities that lack the resources to support digital communications. We should take note that the use of technology must match the technological skills and resources of the target market. For instance, the online payment of premiums could be a big convenience for clients covered by microinsurance and other simpler insurance products with small premiums. But online collection of premiums can be a challenge when applied to customers who do not have bank accounts and other saving instruments. The question on accessibility by our fellow Filipinos still remains as an issue to be addressed. Also, the increased use of mobile devices and digital platforms exposes us to cybercrimes and infringement of data privacy. Thankfully, the Insurance Commission has not yet encountered any severe data security incident as of this date. We strive to protect our data by regularly assessing and monitoring the security measures we have implemented on our system and hardware equipment. To protect our regulated entities, the Commission issued a circular directing our regulated entities to strengthen their cyber defenses, while reminding them to comply with the Data Privacy Act provisions, such as the implementation of privacy and data protection measures and data breach reporting. On IFRS 17 and the valuation standards, amidst the challenges of the new normal, the Insurance Commission still persists to provide sound regulations and policies that will secure the financial integrity and position of the industry. Recognizing the need to update the industry's accounting standards, the Commission has committed to implement IFRS 17 with the current pandemic. Complying with this new standard would be extra challenging for our regulated entities. As a remedy, this Commission, through Circular Letter 2020-62, provided an additional 2-year deferment from the date of implementation of IFRS 17 given to the insurance companies, which falls on January 1, 2025. In view of the deferment on the implementation of IFRS 17 for MBAs, the Commission requires the MBAs to implement the Gross Premium Valuation, or GPV, for valuing life insurance policies starting January 1, 2025. A draft circular letter on the new Financial Reporting Framework, or FRF, for MBAs was already drafted. The same was exposed to the industry for comments and feedbacks through Advisory Number 2021-11. As of this date, the Insurance Commission is currently consolidating all the comments and inputs received from the industry for assessment and consideration. With regard to the valuation standards for MBAs, the Commission, through the Actuarial Division, is currently drafting the circular letter for the said valuation standards. The Insurance Commission is looking forward to expose the draft circular by the first quarter of this year. On the matter of regulatory measures relative to Typhoon Odette, aside from the challenges of the pandemic, just before the year 2021 came to end, our country has been faced with another crisis situation caused by the onslaught of Typhoon Odette. The catastrophic event claimed the lives of at least 208 people and caused approximately 308 million pesos in infrastructure damage. Given the extent of damages and the loss of lives and properties, the Commission had anticipated the possible increase of typhoon-related claims on insurance companies, MBAs, and other entities regulated by the Commission. Hence, the Commission had issued Circular Letter 2021-71, providing the guidelines aimed at strengthening the management policies of claims related to Typhoon Odette. This recent circular enjoined all IC-regulated entities to relax and streamline their company procedures and mechanisms that will facilitate the immediate processing or payment of claims related to Typhoon Odette. The issuance also calls for the relaxation of the notice of claim period and the period for the completion of claim requirements. Lastly, we urge our regulated entities to enhance their services that will improve overall customer claims experience. What now are the prospects for this year and beyond? These recent years were indeed very challenging period for all of us. We are set to welcome the year 2022 with hopes and aspirations, but then again, new challenges came to us with the current surge of COVID-19 cases due to the Omicron variant. But we remain optimistic that the industry will continue to be resilient and responsive to the needs of its clients and stakeholders. We would like to thank our industry partners and regulated companies for their active response in helping our fellow Filipinos amidst these trying times. For 2022 and beyond, we are set to continue our efforts to help the industry sustain its progress and to further uphold the resilience and integrity of the industry. Certainly, it will still involve our collective efforts to spread information and awareness about microinsurance and other financial instrumentalities in general. Together, let us put our work on building a better and brighter future. Thank you to all of you. Mabuhay po tayong lahat.
Thank you very much, Commissioner Funa, for very comprehensive updates on the microinsurance industry, especially those regulatory relief. No? And yes, we appreciate the deferral of the implementation of IFRS 17 no? Sa mga MBAs, and in the meantime, by 2025, use the gross premium valuation instead. No? Okay, thank you. No? Now, ready na ba tayo sa ating panel discussion? Can I get a reaction, please, sa ating mga more than 600 na tayo, ano? More than 500, almost 600 dito sa ating Zoom room, and then we have also some who are joining us sa Facebook Live, no? Okay, so but before we proceed to the panel discussion, let's have another quick trivia, no? Let's introduce the session, no? Can we have the poll question on screen, please, Judith? Again, we'll give you 30 seconds, no, to send in your answers. Ayan na, no? Typhoon Odette is the 10th typhoon that entered the Philippines in 2021. No? Na nakikinig tayo kay Miss Emmy kanina. Sinabi niya yun. Okay. No? Sana mas marami pang mag-vote ngayon. No? Pang ilang typhoon daw itong Odette noong 2021. Oops. Okay, more are voting. Okay. 42% lang yung nakakuha ng tamang sagot. No, and 39 sabi nila pang 13, no? 19% pang 10. No? 15 po ang tamang sagot. No? Okay, maraming salamat for your participation sa ating poll question. Okay, now speaking of typhoons, according to the climate risk country profile made by the Asian Development Bank and the World Bank Group, the Philippines faces some of the highest disaster risk levels in the world, and these are projected to intensify as the climate changes. The country is especially exposed to tropical cyclones, flooding, and landslides. No? Alam na po natin. No? And climate change and natural catastrophes, on the other hand, continue to be underestimated risks. And so the insurance industry must bring back the topic of resilience to the forefront. No? Our moderator for this session is one of the independent trustees of MiMAP. He is a business and organization development specialist with expertise and experience in capacity building and technical support to community-based organizations that are engaged in risk managing financial services, agribusiness, and small and medium-scale enterprises. Let us all welcome our moderator, Sir Milo Casals. Hello, Sir Milo.
Hello, good morning. So, good morning, everybody. Thank you for joining us this morning for our first session of the conference, which is about improving climate resilience of poor and developing communities. As already mentioned by our keynote speakers, natural calamities like Typhoon Odette recently are the calamities within the pandemic calamity. And they continue to pose a major hurdle to our poverty reduction efforts. And because of climate change, not only will they continue, we are told, with greater unpredictability and severity. And it does not help that the Philippines is among the top countries in the world with the largest number of people vulnerable and actually affected by natural calamities. Typhoon Odette, already mentioned, according to the UN estimates, have created devastation with comparable in scale to that left by Super Typhoon Yolanda, Typhoon Haiyan, the strongest typhoon to make landfall in modern history. In terms of damaged or destroyed houses, the number has increased to 1.5 million, which is almost 1/3 more than the time of Typhoon Haiyan. 9 million people were affected, and damage to agriculture and infrastructure reached around 7 to 16 billion, according to the UN estimates. In the face of all of this, we need to take a closer, more urgent, important look at our efforts to promote climate resilience, especially at the community level. We are providers of microfinance and insurance, and we are concerned not just with our business activities or financial expenses during this pandemic and during the crisis, we are concerned, first of all, with the welfare and resilience of the individuals and families whose lives we seek to improve. They are, after all, our reason for being. So the purpose of this session this morning, ladies and gentlemen, is to better appreciate the scope and scale of the kind of disaster risk financing, or more broadly speaking, climate financing, needed to proactively manage and challenge the challenge of climate change and its impact on individuals and communities. We would also like to focus on the roles of yourselves from the microfinance and microinsurance sectors in building climate and disaster resilience, especially in the communities we serve. We are very privileged this morning, ladies and gentlemen, to have an excellent resource person from the Asian Development Bank to share his perspectives on the scale, the scope, and responses to climate change and climate resilience. We will also have a panel of very experienced people from the microinsurance sector, whom I will introduce later after our guest resource person, in order to further stimulate our discussion and exchange. On that note, ladies and gentlemen, I'd like to introduce our resource person for this morning, who has very graciously accommodated our request for his presentation. Mr. Arup Chatterjee is Principal Financial Sector Specialist for Sustainable Development and Climate Change Department of the Asian Development Bank. In this position, he provides operational support in the areas of disaster risk financing, agriculture insurance, health insurance, and financial technology. As focal person for insurance, he provides the bank with expert advice on disaster risk financing, health insurance, pensions and social security reforms, agricultural insurance, and TACA-food. Before joining the Asian Development Bank, Mr. Chatterjee was with the International Association of Insurance Supervisors, the Bank for International Settlements, the Insurance Regulatory and Development Authority of India, and the Ministry of Finance of the Government of India. Friends, ladies and gentlemen, kindly join me in welcoming Mr. Arup Chatterjee from the Asian Development Bank. Mr. Arup.
So, thank you, moderator of the session, Milo Casals, a very old friend of mine, and members of the insurance fraternity, ladies and gentlemen. It is really a privilege for me to come back again and address you today on this important topic on improving climate resilience of the poor and developing communities. Climate change is a very important topic, and the message of the IPCC, which was released last October, definitely makes a very solemn read. Because this report has really sounded an alarm, if I would say, because the planet is dangerously close to the tipping point. And it poses significant risks, not only to emerging markets, but also to developed markets. According to the Swiss Re's estimates, if unchecked, climate change could shave off around 18% of the GDP by 2048. And Asian economies in particular will be hit hardest due to their inherent exposure to pollution, to biodiversity loss, and climate hazards like sea level rise, flooding, droughts, typhoons, extreme precipitation, storm surges, and also heat waves. So it will take a very, very critical toll on sectors like agriculture. It will take a toll on tourism, fishing, and ultimately it will translate into adverse impact on human health and also labor productivity. From a financial institution's point of view, it will impact them also negatively because they will exacerbate the risks by providing, because these institutions provide substantial financing and there will be losses to those types of lendings, and that will translate into losses, be it insurance companies, be it banks. So therefore, we need to collectively work together to see that the climate change is mitigated, and also we bring in investment and solutions to adapt to climate change. Next slide, please. So basically, in today's presentation, what I will try to highlight is the key climate impacts and vulnerabilities, keeping the Philippines in context, although previous speakers have given you some flavor of where these risks emanate from. Then I will dwell on some of the climate-related risks for the finance sector and how do we dwell with those risks in terms of building climate resilience, not only of the financial institutions, but as Milo mentioned in his opening remarks, in terms of making a difference to the people on the ground. Basically, are we able to make their lives better and make them more resilient in that sense? And then we will move in terms of the role of climate risk insurance, in terms of how we tailor-made some of those approaches, what type of products, what type of distribution channels we need to consider, and also in terms of the poor community, what would be the role of community-based organizations in fulfilling this role. So quite an ambitious agenda to be completed in a short time, but definitely our fellow panelists will add further to what I have mentioned. Next slide, please. So if you see the climate projections made by the USAID sometime back in 2017, you will find that because of this rise in temperatures by about up to 2.2 degrees centigrades by 2050, it will result in wet seasons or even dry seasons in certain parts of the country. It will increase incidence of extreme weather, and of course, it will result in sea level rise. And these will impact different sectors, be it agriculture, water, energy, coastal ecosystems, infrastructure services, and of course, human health, which I alluded to. So in agriculture, it will result in crop losses, soil erosion, which will lead to lower agriculture productivity. In terms of the real economy, it will lead to rising food prices, food imports, all which impact the common man and woman on the ground. Water shortages, degraded water quality, increasing floods, and all are part of this process of adverse climate. In terms of energy, there will be reduced energy production, especially where there is more use of hydropower, but also because of retirement of a lot of coal-powered units and movement towards renewable energy, there would also be some loss of production in that sense. In terms of coastal ecosystem, and which is very important for Philippines, both from a tourism perspective and also in terms of livelihoods, the marine habitat and biodiversity loss can not only reduce fish population, but also impact revenue from tourism. And then when we look at infrastructure services, there'll be damage to roads, bridges, and which will all have an impact in terms of affecting supply chains because the connectivity would be affected. Maintenance of vehicles will increase, maintenance cost of vehicles, and also water and sanitation facilities would be affected, which will also have an impact not only on human health but also animal health. But let's focus on the human health part because it will lead to more infections, maybe more pandemics or epidemics, and also population displacement as a result of these factors. So in a nutshell, we will all be affected in some way or the other. Next slide, please. So moving to some of the more specific areas, in terms of human health, the disaster risk will affect communities and livelihoods, and there will be reduced access to healthcare system because connectivity related issues would be there. There'll be food insecurity related issues. And so that will be one important stress that way. The second part is on the coastal ecosystems, which I mentioned in the previous slide. Also, in terms of increased coral bleaching, coral reefs and all, which will affect tourism, and also the resilience of the oceans and the seas, basically, to combat some of the adverse impact of climate. So as a result of that, coastal flooding and is likely to increase, and there might be temperature-induced shifts which will affect fish reproduction and things like that. If you look at urban areas, there will be damage to infrastructure. There will be also damage to sanitation facilities, and also damage to manufacturing facilities also. Next slide, please. So if we look at the physical risks, basically, if you see them as in a nutshell, what do you see? We see today that there will be two types of risks, basically, as weather events worsen. One is the physical risk, and the second is the climate risk. So when we look at these two types of categories of risk, if I may say so, the first, let's focus on the climate risk, and that is where there has been more talk today, where frequent severe events to weather and lasting environmental changes will affect people and assets. They will lead insurance companies, microfinance institutions to large-scale unforeseen losses. It will lead to increase in insurance premiums also. So insurance will become unaffordable. We are talking of increasing insurance penetration, but with rising losses and rising insurance premiums, insurance can become unaffordable. So how can we ensure that insurance remains affordable? And then, of course, when we look at disruptions in the supply chain and the asset values, that will affect the solvency of the insurance companies and also the banks also, because a lot of these collaterals which are pledged with lenders will decline in value. So those are some of the financial impacts which we need to look at when there is higher than expected losses which affect the bottom line of financial institutions. The second category is the transition risk, which we hear a lot, but there is little bit of action so far. And here we are looking at transition risk because of changes in economic policy, changes to technology, and also some social changes for mitigating climate change and achieving what we call today a net zero economy. So if this transition from carbon and water intense economies shifts and it is unmanaged, or we are talking of, you must have heard of a term known as just transition. So when we are talking of just transition today, these types of policy changes can result in volatilities in revenue projections, due to stranded assets, because some production facilities will suddenly stop producing. There will be adverse movements in asset prices. There will be credit risks. There will be labor market frictions also, because suddenly with certain industries being shut down, the labor will become unemployed. And COVID already is adding to that stress. So this will take different forms, basically, not only shift from fossil fuels to renewables, but from, say, internal combustion engines to battery and electric vehicles. In this space, insurance companies are already looking at devising insurance policies and products to incentivize uptake of electric vehicles. There will be carbon taxation for disincentivizing greenhouse emissions. You must have heard of insurance companies who have pledged, I would say, that they will not reinsure coal-based plants and things like power plants and things like that. So there will be all these issues in terms of changing farming practices and other things. And one area where there will be also issues is the legal risk arising from compensation to be provided to investors due to lack of disclosure. Increasingly, something which, as an insurance industry and also as insurance institutions, we have to be gradually focused at in the long term is the ESG, environment, social, and governance. So any investor coming in will have a lot of disclosure, will mandate a lot of disclosure requirements on climate risks from businesses. And this is where disclosure will become immensely important. And on the one, so let me move to the next slide, and maybe things will become a little bit more clearer. So when we look at these risks, from the financial sector's point of view, we are seeing risks to the macroeconomic financial system, where there will be macroeconomic shocks. Say, economies based on export of petroleum will have to rejig themselves. You have to look at risks to financial activities due to transition risks. Of course, we are already aware of the physical risks which affect financial activities. And then we have to look at market risk, because one is due to physical risks, supply chains and markets are affected, but also some of the operational and reputational risks because of delay in transition to the net zero economy. Now, here, when we look at the risks, there are some risks which are systemic in nature, okay? And systemic risks are something which insurance companies do not insure. So that is something which should be out of the portfolio. The systemic risk is something where the government, either in their individual capacity or in unison with other governments, really plays a role. Then there are the structural risks where you can reduce the risk by improving risk management, introducing better practices. Say in the case of transition risk, you can introduce greener technology and things like that. So the structural risk is an area where there will be adaptation and mitigation both. So there will be risk reduction. You will bring the residual risk down so that the project can be insured, or so that becomes very, very important. And here there will be different types of financial instruments which will look at de-risking, so that private sector can really play a role. Because just by reducing the risk, the governments can incentivize the private sector to play a more active role, not only in investing, but also in insuring some of the risks. So public-private partnerships will become increasingly important. Some of the cyclical risks are also areas where insurance companies can play a role, and this cycle, especially the ones which are more severe and less frequent in nature. Those risks, be it because of physical risks or also due to transition risk, they are the areas where insurance companies can manage. So those two areas are where risk transfer plays a more important role. But when you look at the idiosyncratic risk, that is where community-based organizations can play an increasingly what we call dominant role, I would say, in terms of putting in risk-sharing arrangements in place. And if COVID has taught us something, it is here that the role of the community and how these idiosyncratic risks can be better managed, not only in reducing risk, but also in terms of better risk management. So for those types of risks, the communities need to continue to play a very stellar role. And here, regulators and policymakers have to bring in an enabling environment which ensures that they are incentivized, they can fulfill the role what is expected of them, and they are able to service the last mile population. If we are able to identify the role for them in terms of a very structured process, perhaps that's where they can really make a difference in terms of building resilience at the national level also, and also at the grassroots level. Next slide, please. So when we look at climate change resilience, there are two areas. One is mitigation and the other is adaptation. So when you look at resilience itself, the UN has defined it as the capacity of the system to cope or recover from those effects while retaining the essential components of the original system. So if you take the analogy of the indifference curve, basically, in economics, the effort is to put the individual or the community back to the same indifference curve where they were before the loss happened. So that is the endeavor which insurance companies would be working for, because one of the basic tenets of insurance is you are not supposed to profit from insurance. So in this mitigation space, we look at actions to reduce emissions that cause climate change. So this is where investments in sustainable transportation, clean energy, energy efficiency will become important. And so insurance will have to piggyback these types of investments so that there is more certainty in terms of incentivizing uptake of clean energy, uptake of electric EV cars, cars with EV technology, and energy efficient devices. So this will be more of the what you call investment space, but then you have insurance companies will have to come up with products like warranties and business interruption risks and things like that, which help in uptake of these types of technology. The other area is in terms of adaptation technology, where the action to manage the risks of climate change impacts becomes important. And here we will have to look at disaster management and business community. This is business continuity where there has been a lot of discussion in the past. I don't want to dwell in that, but in terms of risk reduction, you look at investing in flood protection, infrastructure upgrades, and things like that, be it for hospitals, be it for irrigation systems, be it for schools, improve agriculture where there is lesser use of water, using drought-resistant seeds. It can be in so many ways. Next slide, please. So So what is the role of climate risk insurance in this space? So the role of climate risk insurance is to catalyze risk assessment. This is one of the classic uses of insurance, which provides a good risk signal. The price of the premium provides a good risk signal to consumers to understand what they can really self-insure and what they cannot. So that is where they can play a role. Commissioner Funa in his address spoke about the role of InsurTech. We can look at using insurance technology, remote sensing technology, and other technology like artificial intelligence, blockchain, and machine learning to improve calibration of the risk and go in for better risk assessment, more targeted risk assessment, so that better products can be developed for the consumers on the ground. And this is where data will become very, very important. The next area is in terms of developing the protection-based products so that it improves not only financial liquidity of insurance companies post-loss, but also of the governments, and here in maybe local governments or local towns where after a disaster, if there is an insurance, there is rapid financial liquidity available to absorb losses. But then there will be issues in terms of transition risk. It is a slow onset disaster. It won't happen like an earthquake or a typhoon. It slowly erodes value over a period of time. So here we need to develop solutions which incentivize climate change adaptation. Say if a community is asked to put embankments to reduce coastal flooding, so in the first phase when the construction starts, insurance premium would be high. But by the time the embankments are constructed, there will be reduced chances of floods and insurance premium would come down. So those types of products have to be developed in conjunction with the commercial insurance industry and the reinsurance industry. And this will help in not only rapid recovery, but also in promoting increased savings. And that savings can be used for more productive purposes. And this, of course, it will improve creditworthiness and improve livelihoods. It will bridge inequality. We are talking of inequality being inequality increasing post-COVID. But if we have proper protection mechanisms in place, we have proper investments in protection mechanisms, this will help in improving creditworthiness and incomes. And of course, this will spur information transformation. There will be more incentives for risk reduction behavior. People will see a direct benefit. So that is the theoretical construct of adaptation. Next slide, please. So when this is a poll which was done in the United States by Deloitte, and to look at the level of insurer preparedness to respond to potential impact of climate-related risks. And this includes the physical risks, it includes liability risks and transition risks. And if you see, the insurance fraternity was very ill-prepared, I would say, you know. Only 3% said they are largely prepared, but only 1 said they were fully prepared for physical risk. And mind you, this is for a country like the United States. So, and 1/3 of the regulators surveyed did not know where the current insurer risk lies, basically. So this is an area where we need to increase communication and awareness of the risks so that not only the insurers remain solvent, but they also develop products which serve the real sector. Next slide, please. So when we look at the different tiers of losses and insurance, we need to look at a range of solutions. One is, of course, looking at solutions for the low-level losses, which I was mentioning too, where the community-based programs, risk-sharing programs can play a more effective role. And this is where there has to be more research and work in terms of understanding what risk-sharing mechanisms can work best and where will be that optimal layer of retention. And then we should look at some of the more severe and extreme losses where risk needs to be transferred by these community-based organizations to the commercial insurance sector and to the reinsurance sector, and what type of pooling mechanisms can be put in place. So that is how we need to move from what you call pooling risk to retenting risk to reinsurance risk, and also looking at different capital market solutions like catastrophe bonds and all. And for this, we need a good understanding of the risk layers, the ones which are less frequent and in nature, we need to retain those risks. So there has to be more focus on risk retention, role of communities, and role of investments in risk reduction. So that would be the most important part. And then when the residual risk is there after risk reduction, we look at risk sharing and risk transfer. And then there will be certain risks, how much ever you try to reduce and transfer, there will be still some things out of the box which will still affect. So these are areas which we need to work and understand more carefully. And here the development of not only the insurance market, but also the capital market becomes important, because on the one hand, it is good if insurance premiums increase, but then where will insurers invest their premium ultimately? They need to invest, and if appropriate investments are not there in terms of matching assets and liabilities, in terms of matching duration, then there will be problems, and insurers will not be encouraged to develop products if the financial market, that is the capital market especially, does not come up with instruments where insurance companies can invest. And mind you, this is an opportunity even for capital market and also long-term investment in infrastructure, because insurance funds are long-term in nature, especially the life insurance funds. And that is where there are a lot of this motivation for investing in ESG components, as I mentioned, will really see a big boost. Next slide, please. So the focus would be on looking at first how to resist the risk, how to basically looking at the self-insurance components, then looking at recovery, and then looking at the reorganization and what role the communities can play. I know I'm going a little bit over time. I'll just take 2-3 minutes more. So in terms of the risk of climate change, who are at risk? I think everybody is at risk. And let's move to the next slide. And here, when we are talking of devising solutions, we need to understand what are you talking in terms of inclusiveness. And I thought this illustration is very, very useful, because if we say everybody benefits, we need to understand where we need to support so that everybody benefits. And this is very, very important when we develop policies, regulations, products, distribution channels, and things like that. The access to financial instruments becomes very, very important if inequity is appropriately addressed. Next slide, please. So in terms of putting the enabling conditions in place, this is something which you already know. We need to put the regulatory frameworks. We look at the delivery channels. We need to look at locally driven and owned schemes. This is where we talk of skin in the game and the role of the community-based organizations. And from a policy perspective, we look at incentives for climate adaptation and disaster risk reduction, and also look at fostering financial inclusion. If we have all these elements in place, we can catalyze climate risk, climate resilient management of systems, and develop some smart insurance solution with the help of servicing and distribution channels. Next slide, please. So in terms of developing pro-poor climate risk insurance, we need to have these elements, 7 elements in mind. One is to look at a more holistic solution which looks at client value. It has to be affordable and accessible, where we need to work with different organizations in terms of ensuring that the premium remain within a range, which, or if it is not within a range, there are subsidies or support available. They need to be accessible, not only in terms of paying premium, but also timely receipt of claims. Insurance is a game of large numbers. If we don't have participation of the large section of the population, insurance schemes won't work. So we need to ensure there is full participation. And this is where community-based organizations can play a role because of the trust element in these systems. And then we look at sustainability of these products which will be there. And the sustainability is important because these solutions or schemes have to really work in the long term. And for all this, an enabling environment becomes very, very important and relevant. Next slide, please. So to conclude, in that sense, we all need to work collectively together. There has to be some very well-designed solutions. It is easier said than done. One way to bring in some of these climate-related products, especially for the poorer community, is to start with pilots. But then we have to ensure that the pilots ultimately replicate and they also grow. And for that, there has to be skin in the game. There has to be proper learning opportunities and also investment opportunities by different sectors. And that is where perhaps organizations, multilateral development banks, some of the foundations and all can really play a role in terms of ensuring lending products first, because people don't want to buy insurance for the sake of insurance. They want to have access to finance, and accessing finance to even introduce green technology or green smart technology. If insurance can help in access to finance, that is the way where we need to partner with lending organizations to see that appropriate products are available to protect the common man and woman on the ground. Thank you so much.
Thank you very much, Arup. Cannot thank you enough for sharing your broad perspective of the industry and the scope and the depth of the risks that we are facing as a result of climate change. Thank you very much. You have helped us, most of us here are actually on the ground, focused on what we are doing in the communities. And your presentation has helped us to better appreciate the risks of climate change that are far-reaching and quite serious. And you have helped us to appreciate as well the scope of risks that we have to be more conscious and deliberate about. You mentioned about risks in 6 specific sectors. You mentioned liability risks, physical risks, transition risks, macroeconomic risks. Well, the greatest risk is if we do not educate ourselves more about risk. And the greatest risk probably is that we do nothing and continue with business as usual without coming to terms with all of these new challenges. So thank you very much for that presentation. You mentioned that everyone everywhere is at risk, especially women, children, the elderly. And I think that is certainly cause for concern on our part. The insurance industry itself is at risk. The banking sector as well is at risk. So we need to take risk management more seriously, more deliberately. We need to talk about risk assessment better, both at the macro, for which we rely on people like yourselves, the insurance commission, the reinsurance industry, but also the micro level of risk assessment, where we look at our own business model risks. You mentioned about risk reduction, risk sharing, and risk pooling. But I like very much that in the end, what matters is that our efforts are pro-poor. And for that, we need to be community focused. Thank you very much. In order to complement and add to your perspective, ladies and gentlemen, we are privileged to have a panel of people who are very much involved in on-the-ground responses to climate risks and to the challenge of climate resilience. Our panelists are well known to us. We have, I'd like to introduce them to you. Manuel Cortina is Actuarial Associate and Officer in Charge of Business Development and Marketing Department of the Philippine Crop Insurance Corporation. He has been involved in helping the corporation doing actuarial research and product valuation, looking at the spread of risks, specifically in agriculture, loss ratios, calculation of premiums for new products, and assessing the adequacy of premiums and reinsurance needs of the Philippine Crop Insurance Corporation. We have as well Mr. Roy Miclat, the President and CEO of the One Cooperative Insurance System of the Philippines, a leading life and general insurance provider in the country. Mr. Miclat is known for the very remarkable transformation of One CISP over the last 7 years that he has been at the head of the organization. His achievement in turning around and in significantly improving operational and financial improvement performance of One CISP has led to an award as Insurance Company of the Year in the Philippine Best Brands Award in 2018. Roy Miclat is also very active in the cooperative movement. He's a very strong advocate of cooperativism. He's treasurer for National Consolidated Cooperative Bank and the DigiCoop Technical Service Cooperative, the first duly registered digital service secondary cooperative in the Philippines. He has been with the co-op movement for 30 years and continues to advocate entrepreneurial approaches through cooperatives. Welcome, Mr. Roy Miclat. And Mr. Vener Abellera, very well known to us, is President and General Manager of Card MRI Insurance Agency, or CaMIA. His agency promotes and distributes insurance products and services of all card group of insurance providers to card MRI clients, numbering close to 6.5 million throughout the country. He has in the past been Executive Vice President of Card Pioneer Microinsurance Incorporated, Assistant Manager of Card Mutual Benefit Association, as well as Area Manager of Card Inc., a microfinance institution. We regret that our fourth panelist, Father Rex Arjona, is not able to join us as a result of a last-minute emergency that he had to attend to. We wish him well and hope to get his perspective at a future time. At any rate, I'd like to begin the panel discussion by inviting our panelists to provide their reactions, their comments, and also their experiences in actually dealing with the challenge of, if the problem is climate risk, the goal is climate resilience. Okay? And as Arup mentioned, climate resilience has the aspects of mitigation and adaptation. So I'd like to invite our panelists to share their experiences on how to build back better and how to build back to normal as soon as possible. What are the challenges and what have been your successes? In no particular order, I'd like to invite first Mr. Manuel Cortina to talk about the agriculture insurance.
Yes, thank you, Sir Milo. Good morning, everyone. And thank you, Mr. Arup, for that very comprehensive presentation. Now, PCIC indemnifies those insured with compensable losses the fastest way we can so that farmers can replant and use the indemnity payment for their other farm activities. Using our own automated business system, we can immediately estimate damage, identify affected areas, and provide risk exposure reports based on the insured farms for the cropping season. After every typhoon, PCIC deploys the General Assessment Team to randomly conduct damage assessment. Thereafter, with notices from the farmer insured that can be done even through SMS messaging, PCIC conducts individual assessment, deputizing its own in-house adjusters, and to augment field adjustment during widespread calamities, we maximize our trained reserve corps of adjusters. One of PCIC's innovations in claims processing is the use of the smartphone technology. Adjusters can transmit field inspection reports directly to our regional servers for processing, and it resulted to a claim settlement response time shorter. The major challenges in the implementation of agricultural insurance are, of course, product development and pricing, underwriting, especially during this time of pandemic because of the various restrictions, and speedy claim settlement. To address these challenges, PCIC continuously is partnering with development organizations to enhance and develop parametric insurance products, piloting the use of smartphone technology both for insurance application and claims processing. Also, we explore the use of other technologies and tools like remote sensing or satellite technology for post-planting inspection and damage assessment, and the multi-channel disbursement facility for fast indemnity transfer. Aside from index-based insurance, hybrid insurance is also something potential to develop. Soon, PCIC and Pioneer will forge a co-insurance agreement to expand agricultural insurance and to provide capacity building and experience to Pioneer under a public-private partnership on agri-insurance. That's all, Sir Milo. Thank you.
Thank you very much for that very succinct but very focused but helpful perspective on the efforts of the Philippine Crop Insurance. We look forward to more updates and information on parametric insurance and other initiatives of the corporation. Thank you. May I call now on Roy Miclat to please give your presentation.
Yeah, good afternoon, good morning, everyone, and thank you, Milo and Arup. Well, I look at the presentation in terms of 3 points, my 3 areas. The micro, which is at the community level, and then the meso, in which organizations operate and part of the community, and the macro would be on a national or regional level. Based on our experience with one CISP, especially the recent Typhoon Odette, it is very important that community-based organizations like cooperatives, MBAs, or microfinance institution should be involved, very much involved in terms of providing support after a disaster. But we should go back in terms of how do we become more on terms of protecting rather than protecting to preventing. It should also be community-based organizations should always be involved because they're the ones who feel, who sees what are the needs of their members or the communities that they are operating. Without asking these community-based organizations who are helping the low-income groups, then any design of products will not be successful because they are not the people involved that you want to get protected or to be preventing any disaster to happen are not involved. So with one CISP, we always ask our cooperative members to provide us information and data. What products do they need? Like an example, we have introduced Home Protect. This is a microinsurance product that provides not really a big amount, but this can help you as a bridge over after a disaster. So you can buy food, you can buy. Now, even you have technology, if like what happened to it, no power, no internet, everything, how will you deliver your services? Even if you are using insurance technology, AI, no power, no internet, nothing will happen. So what is needed? It's the community-based organizations that are based there that you should be tapping to deliver these services. We should be cognizant now of these organizations that can really help us at the micro level. On the meso level, let's say, how do you now synchronize efforts like the LGU, the regional offices of the national government to assist this community-based organization deliver the services that they need? So you have to synchronize everything. Right now, if you look at it, the SWD will deliver the relief operations. The NGOs will deliver their relief operations. Everybody is delivering relief operations right after this disaster. But what we should focus, relief can be handled by another institution, but building back or recovering back can be done by other organizations. We should be synchronizing our effort and channeling resources in the different aspects of bouncing back better. I will give you an example. Last year, before there was a typhoon that hit the Bicol region, and one of the most devastated is Camarines Sur and the town of Lupi in Camarines Sur. It's a 5th-class municipality. What the local government did and the other NGOs there, together with the academe, is to design a housing project that is low risk. When I say low risk, it's not prone to landslide, it's not prone to flooding, and relocate people who were affected by landslide, by flooding. So they built new homes in those areas in coordination with the LGUs, in coordination with the academe by designing the housing that is needed to be resilient in terms of incoming typhoons again. And then they ask insurers that they provide insurance to these communities so that if anything happens, then they will be helped after a disaster. So that is a synchronized activity or a coordinated activity at the meso level. On the national level, if we want to move from protection to prevention, the first thing that we should do is to utilize data that we have. Pag-asa DOST has geo-risk map of the Philippines. This should be utilized by all LGUs, by all NGOs, cooperatives. Where will they put businesses? And then, as in terms of policy, we should be lobbying in terms of the land use policy in the country. We should be strongly lobbying, especially us who are working in the communities, that there should be a comprehensive national land use policy act. Because as you can see, PCIC is affected. Subdivisions are built in irrigated land, like rice lands. So your food security is affected. Flooding will happen because there will be no catch basin in those areas that were converted from agriculture to commercial housing. So this should be one of the macro level issues before you can encourage private insurers to be more active in terms of providing coverage to the low-income groups, because there is no policy that can be looked at, and we are not using existing data that can reduce cost of insurance, that can encourage more insurers to insure our low-income, or what we call the low-income groups or the marginal groups in the country. So these are the issues that I see as for us insurers, that we have to look into the micro, which we should work with community-based organizations like microfinance, cooperatives, MBAs, and then meso, work with local government units with this organization. And on the national level, policy issues first should be, one, the priority is the land use. How do we use our land? There should be a law about this. Then everything would be, we can work on it as a starting point. Thank you, Milo, and thank you, Arup.
Thank you, Roy, for that very helpful perspective of what one CISP is doing on the ground, but also pointing us to the meso and macro level and the importance of a whole of community approach, a whole of society approach, because there are risk mitigation and reduction efforts that are beyond our capacity to deal with directly. Things like land use, recognizing hazard maps, using hazard maps. So thank you for, well, you also mentioned the need of insurance providers to work with NGOs on the ground to work on their appreciation of their own risks. Because you may have the products, but if they do not if you don't work on the demand for these products, educating in households about their need for risk protection through insurance specifically, then this is part of the challenge of working together, a whole of community approach. So thank you. So with that, I'd like now to go to our last, but certainly not the least, presenter, Mr. Vener Abellera. Vener, please.
Thank you, Sir Milo, and good morning to all of you. Before my reaction, I would like to thank Sir Arup for the great and informative presentation. And I also agree that the climate stressor, especially the increase of temperature and severe weather event that we experience, is the effect of climate change. That is the reason why we experience drought and heavy rain and strong typhoon. I also agree to Sir Arup that this climate stressor affect income and health of Filipino citizens. I would like to add property like house was also affected by this climate stressor. And based on the experience of CARD, when severe weather like Yolanda or severe typhoon like Yolanda hit the area, the first property that our CARD members want to preserve is their houses or house. Same with CARD experience to the recent typhoon that hit in Cebu, Bohol, and Surigao. There was a lot of our members damaged their houses, and most of them are totally devastated. We have a product which is a gift plan, a microinsurance product covering the property. especially covering the house of insured. Even it was coverage, it has a coverage of maximum 5,000. It can really help them to reconstruct their damaged houses. But on the claim side, we also experienced a lot of challenges to handle the claims validation. First, challenges are the transportation and lack of cost gasoline. Second, our microfinance staff assigned to those areas that also help in validation was also affected by typhoon. And lastly, the localized lockdown of the pandemic. So what cards do to address this kind of challenges? We bring the card MRI reinforcement staff. Sinabi ko, card MRI staff kasi halos lahat from card Inc., card bank, card SME, card RBI, card MBA, CPMI, or card Pioneer, and CaMIA came from Luzon and some area of Mindanao. Dinala namin to affected area. We also have a microinsurance coordinator and supervisor assigned in the area and they're also helping in physical validation. Pero because of the pandemic, we also conduct blended approach in claims validation. Siyempre, we prioritize the virtual validation. Just send the pictures or damaged houses and interment pad for that claim. We do this to avoid face-to-face contact. If the claimants do not have access to social media like Messenger or Facebook account, we conduct actual validation. And in terms of paying claims, we use, like Manuel Cortina experience, we use our partners like ML Willier, our card Sulit Padala, and also the card microfinance institution in paying the cash basis or cash claims. So Milo, can I also add something? And I think it is good to mention other products that CaMIA and CPMI provided to our card members. It has also helped our members to continue the resilience of their business. We have two products aside from Sakit Plan. The CPMI and CaMIA have another product. We call it Binhi. It is a crop insurance covering the rice and corn plantation with a maximum benefit of 10,000 pesos. Balikan ko lang, it is pushed by Dr. Alip, almost 3 years in the making before the IC approved these products. The trigger of claims are the damaged crop due to typhoons and flood caused by the LPA. This year, to 2022, we are planning to include the drought cover in Binhi. Kasi, as mentioned by Sir Arup, yung stressor natin for the temperature is getting higher. So, we're planning to include the drought covering the Binhi and using the soil moisture index with the help of our partners, the Card Pioneer. We also have another product related last October in some part of the zone area. This product has a component of PA, fire insurance, and the newly business interruption. I think these two products has a great potential to help card members to recover the event of calamity. So it's a kind of product that help our members to become resilient in times of calamity. So maybe that's it, Sir Milo, for the experience of card. Thank you.
Thank you very much. Thank you very much, Vener. We continue to look to card for inspiration and leadership in innovating pro-poor insurance approaches. No? that will help with our goal of climate resilience. You mentioned about home protect, and Roy also mentioned this. The home is not just the residence, but also the place where a lot of livelihood activities takes place. So,
Yes.
in fact, many sari-sari stores are connected to the house. So this is very important. You mentioned business interruption when income is not earned. You mentioned binhi. These are all very interesting, and I know you have your store insurance also. I think a University of Cambridge study after Yolanda showed that families who were borrowers of microfinance and members of microinsurance providers were able to recover more quickly than families who were not.
Yep.
So this shows a lot about the importance of efforts of everybody here. Among the audience, I know there are many microfinance institutions and microinsurance providers. So a very important role. And yet we are challenged with many things beyond our control. Like you mentioned, making it easy to process transactions after a calamity. And you really going out of your way to make it easy to file a claim and to process the claim and to pay out the claim. MBAs especially are trying to do that. And yet there's a challenge if, as Roy mentioned, after a calamity, there's no communication. What do you do? And you mentioned yourself that the staff of the MBAs and the MFIs are also not able to respond because of their own difficult situation affected by the calamity. So our goal of resilience, our goal of bouncing back better should also include bouncing back sooner. And that might mean preparing our staff, MFIs, MBAs, for calamity, protecting them so that they will be available to respond, protecting them and their families. Because if, like the police, they are affected, then there's no reinforcement after a calamity. So I guess business continuity planning is part of the challenge. About the potential for satellite-based communication to communicate sooner after a calamity maybe can be explored. And I think it was mentioned also that parametric insurance and binhi are looking at satellite-based technologies so that you can process and assess claims sooner and faster. So a lot of those, thank you very much we thank our panelists for your input and insights. I think Arup mentioned new ways of financing climate resilience. I mean, I know MFIs, MBAs, they dig into their general fund pockets to fund relief and rehabilitation. And this has been effective, but because of the threat of more serious and more unpredictable damage, even that approach might be difficult in the coming years. So what are the ways of risk pooling, risk sharing? Are there already opportunities to invest our investable funds in green technologies? So I guess the challenge of finding new ways of financing climate resilience is before us. And although obviously there are more challenges than we have answers for at this time, we hope that this session will start us thinking and learning more about the challenges and about the risks and about our responses to risks. So I'd like to, yes, that's Roy, please continue.
Yep, just 2 points. One is that this is also now the reality that we face among MBAs, among cooperatives and development organizations and NGOs. There's a need now to talk together, to work together and pool the risk that we face and find to find ways to transfer this risk and pull our resources together. Remember, reinsurers wanted bigger volume of businesses that they want, so they can be absorbed by them. So it's always a game of numbers. So I think this is what we can start by working together, pooling the risks that we have, and at the same time looking for organizations that can work with us so that we can transfer some of the risks that we have. Second is that I will always go back to the community where all our organizations are working. As an example for cooperatives, when Typhoon Odette hit Siargao, Dinagat, Surigao, and there were cooperatives that were affected, one of the big cooperatives in the country, FICO, First Community Cooperative, responded by transferring their people that were not affected to the affected branches, so they can respond immediately. This is one way of, this is a short-term approach, transferring your people so we can, but I agree with you that we should be conscious enough to develop the resiliency of organizations or branches that are based in those high-risk areas. But that's one way of what they've done is so that they can respond immediately to the needs of the members. Like, because Surigao is near Cagayan de Oro, near Butuan, so the people were transferred immediately to assess and to help, because their staff in Surigao, in Dinagat, and Siargao are also affected. They were also victims of Odette. So just like Yolanda, the local government in Yolanda is also paralyzed. So there should be an immediate response to transfer people to support the branches in those areas. So I just would like to share those activities of cooperatives that what they have done in this recent Typhoon Odette. So that's my take on the points that you have raised. Thank you.
Yeah. Very, very important, Troy. You know, we should think of ourselves as first responders after a calamity, and therefore we need to protect the ability of first responders to respond before a calamity happens. When we know it's coming, then we need to make sure our first responders and their families and their premises are secure so that they can respond. So thank you very much for pointing that out. And I take very well your emphasis that we need to find, as mutuals and cooperatives, we need to collaborate. There should be mutuality among mutuals and cooperation among cooperatives to look for ways to share the risk, to pool the numbers so that we get the critical mass needed to get better ways of financing risks. Thank you very much. I'd like to invite the participants to just, if we have time, to just text or chat questions or comments that they would like to make and to address to any of our panelists, including our resource person, Arup. Thank you very much. So this has been, I believe, a very enlightening session. If nothing else, I hope that it will help us appreciate the need to learn more and the need to take risks assessment more deliberately and seriously at our levels, to look at the risk to our business model of increasingly severe and unpredicted calamity, but also work with reinsurers, the Insurance Commission, and multilateral agencies and organizations like the ADB to help us appreciate the larger context and families of risks. Having said that, our goal is climate resilience at all levels of society. And that means adaptation and mitigation. It means preparedness and reduction prior to a calamity. It means building back sooner, building back better after a calamity. It means more innovative products like those outlined here. It means using more technology, perhaps harnessing satellite technology for more pro-poor approaches that will make it easier, faster, more reliable to respond to the insurance needs. It needs more education of the families and the individuals we work with so that they take risk and insurance more seriously and take more proactive measures to protect themselves and their families. So on that note, I would like to thank your participation. There is a question here by Junjay. Can you discuss that, Junjay?
Yes, thank you, Sir Milo. No? I think particularly for policies, no, in terms of advancing climate risk insurance, maybe our resource person and panelists can shed light on this, no, and how do tax issues, no, affect the advancement of climate risk insurance in the Philippines. Thank you.
Okay.
Great. Thank you. Junjay, can I mention something on the taxation part out of Chatterjee?
Yes, please.
Okay. So, well, taxation has been used in many countries to incentivize uptake of products, basically not insurance products, but new technology. So that is something where you have to develop some sort of a compelling case in terms of convincing tax officials why what benefits need to be provided for climate risk insurance. So that is something which can be done provided you have data in terms of disclosure that you are able to reduce the risk or contribute to one or more of the ESG parameters, that is environment, social, and governance. So that is something you need to work on in terms of building evidence and what type of risk you are able to reduce or what type of investments you are able to incentivize. Having said that, on the other point, in terms of insurance pools, there are certain regimes where insurance companies, if they build a catastrophe reserve, they are exempt from taxation. So you can possibly take advantage by drawing examples from those jurisdictions in terms of how they are incentivizing the special catastrophic reserve funds in form of tax-exempt reserves. Thank you.
Thank you, Arup. We'll certainly follow up on that. Other panelists who want to respond?
Okay, Sir Milo. So I think it's the support we need. Yeah, I think it's a support. Agree with Sir Junjay and Sir Arup, but I think it is the support we need to the government. Is to lower the tax to all non-life insurance, even it's microinsurance or traditional insurance. By lowering the tax of that non-life insurance, insurance company can give much lower premium. So the one who benefited for these are the poor who want to buy the non-life insurance. Ang laki kasi, almost 25% the tax of the non-life insurance. So if we lower it, so we can lower the premium of the insurance product.
Milo?
Yes, right.
Yeah, for me, I will only limit tax incentives to microinsurance or to the insurance that are being offered to the low-income groups. Because if we will be doing blanket reduction of taxes for non-life products, that would disincentivize everybody. Because people living in Forbes Park will enjoy those reductions, and they have 10 cars that they will insure, that they will enjoy also the reduction in taxes. So that would not make it fair for the low-income groups who are trying to act out something to buy an insurance. So I don't think a blanket reduction in taxation for general insurance is needed. What we need to lobby is to reduce or eventually scrap taxes that are being provided for, one, like parametric insurance for agriculture, like catastrophe insurance for low-income groups that insure business continuity, loss of income of low-income groups. So this can be incentivized by doing that way. If they cannot remove it, then it can be lowered. But I won't agree to reduction of the taxes in general insurance. You can just imagine if you will reduce the tax of a building that is owned by business conglomerates, then the money saved is not being transferred to the community. It is being put into their pockets. So I personally, I agree with the reduction or scrapping it, because us in the cooperatives, we enjoy such. We don't pay value-added tax. We don't pay DST for our non-life insurance. And I think MBAs, MBAs should also enjoy that privilege. And cooperatives will be with you, with MBAs, to lobby that you should also be exempted from these taxes, but not across, because we will be left to the disadvantage again. You can just imagine if these big insurance companies will come into our market because they don't need to pay taxes. Saan tayo pupulutin? They have the resources that they can compete. So, I mean, it's not protectionism, but because we are the ones who are, we are mutuals, we are cooperatives, and anything that we earn is given back to our members. So that is the best argument, Arup. Anything that we earn is given back to the members. So we don't retain earnings. Everybody owns this institution. So that's the best argument that we can provide. That is the argument that we use in the cooperative movement. And I agree, mutuals should be exempted from paying taxes like VAT and DST on non-life insurance products. Thank you.
Thank you.
Yes, excuse me,
Yes.
Sir Milo.
Yes,
Yes,
please.
I agree with Sir Roy Miclat. The taxes that we lobby is for the microinsurance products, and not I mentioned the traditional. So sorry for that I mentioned it. So, but yes, I agree that microinsurance product on the MBA's product will be lower or exempted on that taxes. Thank you.
Thank you. So,
Thank you,
Junji,
Sir
I
Milo.
hope you got the
Thank you.
information that was helpful.
Camilo, I think we have about 3 minutes. So maybe we can have PCIC's updates on the subsidized tax program.
Okay.
If Manuel is prepared to respond on that. Thank you, Camilo.
Okay, Sir JJ, for that particular question, actually, we are not allowed to do that. But for our rice and corn, it's actually tax-free. Okay, for the rice and corn insurance. But for other insurance products that we do have, like livestock, high value, it's also taxable. But I agree with Sir Milo and Sir Vener that for agri-insurance, okay, should be given consideration, okay, to have a lower tax or better no tax at all, because our farmers and fisher folk, we know that they are poor. They can hardly afford, okay, to buy agri insurance product. Good for us PCIC, because we were given that subsidy from the national government, and to subsidize fully their in the insurance premium of our farmers and fishers listed in the RSBSA database. But given that there's no subsidy, it is always an experience with PCIC that we can really hardly sell products to our poor farmers and fisher folks. So the tax is an add-on to the expense that they will pay to an insurance company. So I agree to that idea. However, since we're government, and it's only within our mandate, I guess, that rice and corn is tax-free, but all other insurance lines, there are also taxes included.
Thank you very much. We appreciate the hearing from you, Manuel, and Roy and Vener. Efforts to constantly look for ways and means to make agriculture insurance work for our farmers. It's a very important sector, a very important source of livelihood. So on that note, I'd like to thank our panelists, and especially Arup, also our resource person. Cannot thank you enough for the very enlightening and rich exchange and presentation of ideas and perspectives. I hope the participants have found this a helpful session, and will come out with a better sense of how to proceed with climate change risks and climate resilience. Thank you very much.
Thank you, gentlemen. We'll just have a quick photo opportunity. Aleli, are we ready?
Ready po. So, smile po tayo. Ready? 1, 2, 3. And one more po. 1, 2, 3. Thank you so much.
Thank you. Thank you again for very much engaging discussions of our panelists. Okay.
Stay safe, everybody.
Yes. That's it for our session this morning. And at this point, tayo naman, no? We'll have the photo opportunity with all the participants. No? But before that, let me take you to the remainder of the sessions this afternoon and until tomorrow. No? This afternoon, our session 2 will explore product and distribution adaptation strategies. And then session 3 tomorrow morning, we'll talk about solutions and initiatives that are needed for business continuity and greater resiliency of MSMEs, especially the micro entrepreneurs. And then session 4 tomorrow afternoon will take up the future of work in the post-pandemic world and the strategies being implemented to improve the employment environment towards attracting and retaining talents. Now, I will turn you over now to Aleli for the participants' photo opportunity. Thank you everyone for being such a nice audience. Magandang tanghali po sa lahat.